There he is. What's up, my man?
Hey, how's it going, guys?
Doing well, man. So we'll just jump right into it since we're a little short on time. So you're the co-founder and CEO of Arch Network, which is a programmable execution layer for Bitcoin DeFi, real world assets, and capital markets. So your site says that Arch transforms Bitcoin from digital gold into sound money for the future. And I think really my big question is, why does Bitcoin need transforming, and what gives you confidence there's demand for it?
Yeah, I mean, historically speaking, there's been a lot of attempts at trying to add programmability to Bitcoin. By all intents and purposes, we're talking about EVM L2 copy paste chains with a bridge, and of course, Bitcoin DeFi has existed for quite some time, just on Ethereum and maybe a little bit on Solana for that matter. But what's required there is you have to put your Bitcoin into a centralized custodian or bridge and wrap your asset, and then into a ERC20 token where you're now using Ethereum infrastructure and wallets, and you're not exactly native to Bitcoin anymore, which the whole point is to be able to tap into the native liquidity that exists on Bitcoin today and make it more productive. So while you can certainly take your Bitcoin somewhere else and borrow against it and maybe use it in other DeFi applications or protocols, nothing exists today that lets you actually manage your actual Bitcoin that you hold in your Bitcoin wallets and allow that to be more productive. So that's what Arch ultimately set out to do. We had to create some very novel and unique infrastructure that was specifically designed for this purpose. And that's why it's so different, right? It's not this duct taped or hacked together version of out of the box implementations of EVM or SVM or even other consensus mechanisms that have been used in other worlds, like in the Cosmos chain world as well. So everything is completely custom, and that's why we have a little bit of an advantage or edge being able to give a more native experience natively on Bitcoin.
Yeah, I can't tell if it is just purely like the cultural dynamic in Bitcoin where people do not want to, like, I couldn't even touch my Bitcoin if I wanted to in any quick, easy way, and that's sort of by design. It's a thing that I'm very stoked to hold for forever. Or if it is this sort of idea that there is this such meaningful security trade-offs that need to be used to actually be able to participate in I guess more dynamic uses of that asset on chain. So can you maybe talk a little bit about the technical design challenges that you had to overcome to make this secure and hopefully comfortable for people to unlock their Bitcoin?
For sure. And I think it's a completely fair point to say that there's a lot of skepticism around this notion of being able to tap into native programmability on Bitcoin. You have the hardcore Bitcoiner community, the maxis, if you will, that doesn't necessarily trust anything that smells like a wrapper or any type of centralization or non-custodial implementations, right? And that's all that's really existed to date. But really, the technical mismatch that exists around Bitcoin and, let's say, every other programmable chain in existence is you have the UTXO model versus the account-based model. Bitcoin has the UTXO model, of course, whereas Solana and Ethereum and all other L2s operate in an account-based system. So really what that means is there's a lot of compatibility gaps and complexity in making the UTXO model work within what we understand DeFi to work, like with pools and multi-party contracts and things like that. You also have a very slow base layer. Bitcoin block times make roll-ups and settlement very expensive and difficult to get any type of consistency around settlement. Unlike Ethereum, where you can easily anchor tons of call data to the base layer. And then, of course, there's no native fungible token standard as well. So it's really hard to bootstrap ecosystems that are composable when you don't really have these ERC20 equivalents, vault standards, and things of that nature, like we've come to be familiar with in other programmable chains. So all those things to say that it's very challenging for a developer to build financial and otherwise types of applications on Bitcoin, even though that's clearly what people are trying to do. And you saw this last year with people hacking around the limitations of Bitcoin with things like meta protocols, discrete log contracts, DLCs, and then eventually the BitVM bridge, which is trying to make a more trustless experience for these layer twos.
I'm curious how you're conceptualizing the opportunity of the Bitcoin app layer. Is it just going to be the products we see on other chains with native Bitcoin and kind of the security guarantees of Bitcoin, or do you see unique opportunities being unlocked here, maybe because of the UTXO model or other reasons?
Well, I don't necessarily think you're going to see that many new types of applications per se. What's going to be uniquely different is a whole world of liquidity, a deep, very, very deep ocean of liquidity that can match the new wave of tokenized RWA assets that are coming on chain. If you're going to be bringing trillions and trillions of RWA assets on chain, you need to match that with an appropriate amount of liquidity. Otherwise, there's not really a whole lot of point to the tokenization of that asset, making them more productive. So that's going to be Bitcoin. Also, from that standpoint, it's going to be a lot easier to convince institutions that are holding Bitcoin on their balance sheets to use it in that type of way, rather than holding Solana to participate in something that's very similar in the RWA and institutional yields type of context. So we have a lot of reasons why Bitcoin should be used for participating in DeFi, but they don't necessarily have the right frameworks for custody, for tax compliance, as well as just this nature of programmability that hasn't existed to date. That's what's ultimately going to change the game for these institutions, and they don't necessarily have to bridge over to Ethereum and Solana to participate.
I'm curious about maybe your comment on the digital asset treasury companies. Like, it seems like what we've seen is, or maybe there's an argument to be made, that a lot of the sort of financial applications have just sort of been built not on chain, but have been built in the traditional financial system, and the strength of Bitcoin as an asset and its immutability and the lack of change that happens there is actually giving people a ton of confidence to go and do these more financial engineering type of products in more of the traditional world. So obviously Sailor being able to unlock this flywheel, I guess, of infinite energy being one example of it. Yeah, I'm curious. Do you see, are those competitive in some way, or I mean, what's your comment on sort of that world? I don't know.
I think the DAT space is obviously, like, it is fascinating, right? The overly financial engineering of it all, I think, is really interesting. It can be seen as somewhat of a house of cards that is quite dangerous to the ecosystem or the price of Bitcoin if things get aggressively unwound. If MNAV gets a little closer and closer to zero, and God forbid under zero. But that really just brings innovations like Arch and the DeFi economy on Bitcoin, more importantly, denominated in Bitcoin, more important to these digital asset companies, because as more and more come up, they're going to be competing for cost of capital, right? And the ones with the least or the most negative cost of capital, which means they need to start looking at, how do I get yield and make these assets more productive? That's ultimately going to be their edge versus other digital asset treasury companies that are using maybe debt or dilution in order to accumulate more NAV. So I think that's where we can really come in and say, here are some really interesting yield protocols that you can make your Bitcoin more productive in the least trusting or most secure way. Some of them rooted in RWA yield that they obviously probably already use in their traditional strategies, whether that's T-bills or corporate bonds, tokenized reinsurance, debt funds, things of that nature that give you a little bit higher yield than the traditional credit markets. But historically speaking, they've been very gated and very expensive in terms of red tape and how to get exposure to these assets in the private markets. So as those opportunities come on chain, that's going to be the first thing that I think is the domino that gets these digital asset companies more involved, because it's AAA rated private credit instruments that institutions already use every single day. But now it's just much more accessible, and you can use DeFi to even make it better. You can borrow against these assets, you can loop these assets and get more compounded returns. So it's a whole different world, but it's all going to be coming on chain here pretty soon.
How do you think about Bitcoin successfully competing for application developer mindshare against chains with like well-established ecosystems? Is it just a matter of there being an easy programmable layer, and then the scope of the opportunity will take care of itself? Or do you think Bitcoin needs a Solana foundation like entity for this to really emerge?
Yeah, it's a great point you bring that up. Like, Bitcoin doesn't have a foundation that can really incubate or bootstrap the ecosystem, unlike every other programmable chain in existence, right? There was a lot of heavy lifting that the early investors of Solana, like Multicoin Capital, RWAs, Big Brain Holdings, they all played a pretty big role in the development of the chain, as well as did FTX, right? They invested heavily in the early apps of that ecosystem, like Serum. So that is an interesting dilemma that Bitcoin has, where there is no president or CEO of the foundation that can decide this is what we need to do to drive more attention or adoption or development of resources. So when it comes to tooling like indexers and RPCs and all the things that people take for granted in the Ethereum ecosystem or Solana ecosystem, a lot of that was incubated or subsidized by these foundations that have budgets. So that doesn't exist. So who's going to do the heavy lifting and work? Well, we are definitely making a lot of investments into those things to try to make it easier for developers to come in and build. But that being said, the biggest opportunity, the reason why they're coming over is because it's, total blue ocean, right? There's so much liquidity and not any amount of competition that for a similar type of product that you'll see, which gives, an opportunity or paves the way for the next wave of blue chip applications that maybe hasn't really existed since the early days of the 2020 cycle of DeFi summer, right? So if you're a really quality builder, are you thinking about launching the 4th, 5th, or 6th perptex on Solana, competing with Drift and Jupiter, right? Or do you want to be the #1 perpstex that taps into the hundreds of billions of dollars that exist on Bitcoin that wants to participate in that new type of application? That's a huge opportunity.
So I think Josh and I are folks that are Bitcoin adjacent, probably for all the dynamics that you're sharing here, like for early stage investments that are, Bitcoin is something that we can hold, but maybe doesn't have the sort of startup opportunities that we see in other ecosystems. But can you maybe just catch us up? Like, what are the most, outside of what you guys are building, where are the other really interesting areas of innovation in Bitcoin today?
Well, I think you see like two kind of divergences in terms of utility of programmable Bitcoin. You have one that's really trying to innovate in the payment space. Like, how do we make Bitcoin more speedy and fast so that you get instant finality, so it can be used in payment applications for virtual cards, so you can spend your Bitcoin or send it to people or use it in the context of gaming, because you need it to be much more faster and performant than what Bitcoin ultimately allows you to do now. So you have a lot of innovations happening in the payments world, but then also in this whole DeFi world where we're trying to use everything that we've learned in the Ethereum and the scaling of all those layer 2s and Solana and all the cross-program composability that you get from the efficiency of the Solana chain. We want to just merge all of that foundation and knowledge together so that we can ultimately build something that is capital efficient, most importantly, because I think that protocols that are winning are really focused on capital efficiency. And then something that is just truly sustainable in terms of yield, not just this flash in the pan that relies on, Ponzi inflation economics versus something that actually creates, profit, revenue, yield potential for these liquidity providers.
All right, Matt, we got to leave it there, man. Appreciate you taking us in dipping our head a bit under the water of what's happening in the Bitcoin world. You guys seem to have been doing a lot of work here, so I guess, Josh, we got to pay attention to apps on Bitcoin here now.
Of course.
For sure.
When's mainnet for Arch?
That's kind of like the mimetic phrase that the whole community is echoing right now. Mainnet, but I would say very, very soon. We just finished our audits up with a few of our audit partners. We're locking in a lot of our interop partners like Bridges, Oracles, and some things of that nature. But I would say sometime in the next month, we'll have something out pretty soon. Yeah.
Love it.
All right, brother. Thanks so much.
Yeah, no problem. Thanks for having me.
Peace, man.